Meta is down double digits since the company released Q3 earnings, and everybody, their mothers and sisters, are wondering about the AI bubble, the overvaluations. Where is CapEx going? Is Zuck insane? There is a lot of media noise, and in this video, I'm going to address some of the, I want to say the bull pillars, the pillars for a bull case, but I want to focus as well on the bear arguments because I don't think they hold up for a bear thesis on Meta. There is one thing that does make me concerned, and it has nothing to do with AI. In fact, it's from a regulatory perspective because in Q4 there is a good chance that the LPA in Europe is going to kick in, and that may incur some unusual expenses. But that's another fear that I'm going to discuss in the video. Let's start with what I believe is the most important part, the sell-off. We have Q3 total expenses that went up 32% year over year, 30 billion. All right. Those expenses, if we were to break them down, we have infrastructure opex, we have compensation, we have legal charges. I will explain this in a moment. Depreciation, as I said, third-party cloud. This is key. Third-party cloud should give you an idea that the company is not managing to get the capacity they need, so they have to go to third-party companies like CoreWeave and contract freaking 14 billion in AI infrastructure compute. In AI infrastructure in data center compute. So the point here, this is a 5-year contract, by the way, that has a clause to extend through 2032. The point is that the company is struggling to meet the current capacity, and they have to go to third-party clouds, and the market is panicking about CapEx going up. It doesn't make sense to me, I will panic if Zuck comes in the earnings call and says, do you know what? I'm going to cut CapEx 50% next year. That will be something to, I will sell on that announcement. No doubts, any day. But, the fact that CapEx is going to be, on a dollar basis, on a dollar basis growth higher than in 2025, that does make me really sweat. So moving on, we have total expenses for fiscal 2025. The outlook was raised from 114 to 118 billion. This was the initial range, to 116 to 118. So the midpoint was raised on total expenses. And this implies 22 to 24% year-over-year growth. Now, when we look at CapEx, the outlook was also increased. Not the higher bound is still 72 as back in Q2, but the midpoint was raised because the lower bound is now 70 billion and not 66 billion like it was before. Now, from a computing perspective, the compute needs expanded meaningfully versus the last quarter, and that's why the company is aggressively investing in their data center build-out. So this was one of the main points that was really voiced in the media, and I don't think it deserves as much attention as it had. It says CapEx dollar growth is going to be notably larger than in 2025. Total expenses are going to grow at a significantly faster rate than in 2025. In other words, that's going to be higher than 22 to 24% year over year. Let's say 28, 29%. I really don't know what they mean by significantly larger. I wouldn't expect that to be 50% higher than in 2025. So, yeah, I don't know. I would have been really more concerned if the company came in and said, do you know what? We're actually not growing CapEx. That would be a sign that says, maybe AI is not being used in the market. Maybe AI is not being used. Maybe Meta AI is useless. Maybe Vibes traction is not there. Or maybe the company doesn't really use AI for their ads recommendation business. Bullshit, as you're about to see. But I'm going to continue now with the downside analysis because, well, you already know the upsides. I'm going to go through the upsides as well, don't worry. but you know the upsides. By the way, what you see on the screen is Guidance Terminal. Absolutely love the tool. I developed it myself, which is really a key tool to understand earnings. Now, moving on, we have the non-cash expense. So it turns out that Q3 GAAP the tax rate was 87% due to a one-time non-cash reduction in deferred tax assets under the new One Big Beautiful Bill. Now, without that non-cash expense, the tax rate would have been 14%. In other words, from an EPS perspective, if you take into account this, I think it was like 16 billion expense. If you take that into account, EPS is 1.05. Without it, 7.25, beating by far the consensus. Speaking of the consensus, it was 667 going into earnings, and the actual was 725. Not bad. Not bad in my view. I keep coming back to this news. Sorry, because I have many tabs open. This was one of the items that was announced after the earnings, 30 billion in bonds in a bond sale priced between 5 and 40 years. This gives you an idea that despite the attention the media gives to the AI bubble, major banks were among the book runners in this massive deal. And yeah, if this was so risky, if Meta didn't have a use case for the build out, I don't think that the bankers would have gotten involved. Anyways, moving on, we have Reality Labs. It's a difficult segment because from profitability perspective, from an EBIT perspective, it's not bright. And it makes sense. I mean, it's one of these. It's like Google's, other bets segment. And when you compare it with the family of apps, this is on a profitability basis, on an EBIT basis, you can see a quarterly loss of 4 billion in this segment versus almost 25 billion in the family of apps. So on the positive side, I'm going to discuss later on some of the upsides in regards to Reality Labs, but the downside is that Q4 is not going to look bright. So during the earnings call, the company guided total revenue between 56 and 59 billion, but the outlook included Reality Labs revenue to be lower year over year in Q4. And one of the reasons was a front-loading effect where retailers procured Quest headsets in Q3. And that, of course, if you look at the revenue growth in this segment in Reality Labs, you can see it's 74.1% in the last quarter, significantly higher. I think it was the best growth since 2022, which is not bad at all. So that front-loading effect is going to have a negative impact on Q4. And the company also said that there was a lapping introduction of Quest 3S in Q4 24, so that has a negative effect now that they don't have new products. They have the glasses, but the company said the AI glasses are expected to grow in Q4, but more than offset by Quest headset headwinds, which means that the headwinds in Quest sales is significantly larger than the sales of the AI glasses. Moving on, this is the one, if there is one risk that keeps me up at night, is this one. So there is an increase in headwinds in the EU and the US, which could significantly impact financial results. So in the EU, the company has been engaging with the European Commission on something called less personalized ads. This is something called LPA. Now, the CFO was not able to rule out changes in this regulation. And what I'm worried is what you see here in green is that there is a potential significant negative impact on European revenue as early as Q4. All right. So you can see actually her remarks here. So we cannot rule out the Commission imposing further changes to that offering that could have a significant negative impact on our European revenue as early as this quarter. Significant negative impact doesn't sound good. So it's Europe. Europe is not as capitalist as the US, and I'm really not keen on the LPA because you already saw how the market reacted to this non-cash expense, due to the one big beautiful bill. If you were tracking the earnings, as soon as they went out, Meta was down 5%, and that was way before the earnings call. So this algorithmic trading, as soon as they see a result that's not where it should be, the market sells off. So I don't know. This is something to consider. I'm not really keen on that, but it's difficult to quantify how possible is for this risk to materialize. You really don't know, and because you don't know, I would consider this to be one of those black swan risks, where if you are loaded on calls in Meta, something I'm not, by the way, and this is the reason, if there is a press release coming up from the European Union, and then suddenly the CFO has to restate the guidance for full year, and maybe they have to lower that range. As I said before, it's currently at 56 to 59 billion. That's the total revenue in Q4. If this materializes and she comes up before earnings saying that, what, because of this risk, it's going to be 50 to 56, that is going to be bad. So I'm not going to play with that. All right, moving on. In the US, they had multiple youth-related trials scheduled for 2026. I believe this was related to some lawsuits possibly in the US. And Q3 legal-related expense growth higher due to charges and lapping prior accrual reversals. Okay, yeah, a mouthful to say legal expenses are high. Now, if you look at the ad mix, I don't think this is a risk, but this was perceived as negative, all right, by my application. So Q3 ad impressions were up 14% year over year. Great. Now, if you look at the average price per ad, that was up 10% year over year. However, it was offset by impression growth from lower monetizing regions and surfaces. Possibly that means that more ads were being shown on TVs, more ads were being shown in Latin America or East Europe or India, I don't know. And the problem here, I'm worried that I'm not sure how much control the company has over its AI algorithm to recommend the ads. And I'm just wondering, and I will keep a very close eye on the average price per ad variation, especially in Q4 and Q1 next year, to see what's going on. Where is this going? Because if this is going downhill, it will be a sign. I don't think Meta engineers at Facebook or Meta are going to be that stupid to not know how to control the different parameters in their algorithm to display the ads. But given that AI is so complex, like you probably know, if you have if you have one prompt and you run it twice on ChatGPT or any other LLM provider, the answer is never the same. It's really difficult to have a really congruent and repetitive reply in your large language model unless your prompt is spot on. Which, by the way, the prompt to make that, it's insanely targeted. So I get, the same results regardless of how many times I run the LLM. Now, moving on, we already talked about compute capacity. So compute capacity constraints and risks due to either over or under building. I want to highlight here some of the quotes from management because, for example, Susan Lee said, they are relatively early. Actually, they sit in the process of putting together the budget for 2026. That's why they didn't disclose a CapEx value for next year. And then she said, we were certainly seeing that we wish we had more capacity today than we do. Again, this is key because if you take a look at the deal with CoreWeave, 14 billion over 5 years, that should give you an idea that the company is not being able to meet the compute that it requires to operate either their recommendation in the content recommendation algorithm or the ads algorithm, let alone any LLM from Llama it's to me it's clear that the company is struggling to reach the capacity that they need. Therefore, they're investing in a build out. Now, Mark noted, and I think this was during the Q&A, he said on what happens if there is an overshoot. So you build too much too fast. He said, and this is key, he said the worst case will be that we effectively have just pre-built for a couple of years, in which case, of course, there will be some loss and depreciation, but we will grow into that and use it over time. That is key. Because there is little to no chance, if you look at the adoption of AI, if you look at how many tokens are being served by large language models, AI is not going away from here. There is no peak in there is no plateau, let alone a peak. There is no plateau in the LLM utilization right now. And saying that you're overbuilding and then what happens with that capacity, that's going to be used. Maybe now, maybe 3 years later, but that capacity, those GPUs are going to be running on fire. Why? Because you have people like me who are building apps. I build guidance terminal using AI. I build this. What you see in the screen right now is AI. I'm real. I swear to God, I'm real. But what you see there is AI. The text here was analyzed. Back in the days, you will need a team of analysts to do this. Not anymore. So yeah, I don't buy the argument that there is a bubble and overbuild, and then similarly to the internet infrastructure back in the 2000s. That's way different. It's a different game. Sorry to say. Now, when it comes to different, we're talking about the WhatsApp status, and I think it was the WhatsApp business as well as threads. They're monetizing, but they're not meaningful right now. So I don't know. I will keep a close eye on where these two, where is the revenue from these two different applications, but I wouldn't consider this to be meaningful to the ads revenue. I think in the upside analysis, the company did mention, if I have a quick look at threads, they did mention 150 million daily active users. They did mention that ranking optimizations drove in Q3 10% more time spent on threads. Again, AI. And then they said at the launch in direct messaging in Q3, and ads are running now globally in threads. And then when it comes to WhatsApp, this is key. Click to WhatsApp ad revenue was up 60%. Again, my speculation, but I think that when you do an ad campaign that involves chatting via WhatsApp, the person you're chatting to is not a human. It's not even someone in the Philippines. It's a freaking AI. Let's be honest. And the reason why that's so high is because advertiser, especially the sneaky ones, they have true brain cells and say, hang on a second, instead of me texting, I can include a full comprehensive policy. I can call OpenAI's API or any other API service like Llama, for example, and they can run, different prompts, which are the questions from the user, and then the answer is provided by the large language model. Big deal, So yeah, overall, I see potential. I think other revenue was up 60% year over year to 690 million. And that was mainly, by the way, WhatsApp paid messaging, as well as, the Meta verified, the check mark. I think WhatsApp paid messaging was the bigger part here. So again, it's a lot of money, but compared to the family of apps business, it's not that much. In fact, if I scroll down, I'm going to be able to find how much they made in the family of apps business. That's 100 times more. So 50 billion, up 26%, by the way, year over year. So again, you have Barry, you have the usual suspects, the value guys, panicking around valuations, but they don't want to see these growth rates. And sometimes, yeah, they do comparisons with pre-pandemic levels, but the context is different. The value was different. Growing 50 billion at this rate is not the same thing as growing 10 billion at 30% or 40%. The higher your revenue, the more difficult it is to grow it. So I remember one of the arguments from Barry in his X account was the average growth of the hyperscalers before the pandemic and the average growth in the last 2 to 3 years since the AI boom, and it was lower. I'm like, of course it's lower, idiot. It's lower because revenue went up in the meantime. And the higher it is on an absolute basis, the more difficult it is to grow. Yeah. So I don't buy that argument. Sorry to say that chart was a bit ridiculous in my opinion. Now, I'm going to focus on the upside in another video. Quite a few points, as you can see. So I'm going to do that in the next follow-up. For now, that's it. Thanks for watching the video. Have a look. The tool is free. If you sign up, you're able to see a lot of information, particularly the guidance. I haven't even talked about guidance, which is really, really cool because you can click here and you can see, some of the quotes related to the AI compute capacity build out. So it's quite interesting to keep a track. Anyways, thanks for watching, and I will see you in the next one where I talk about the upsides on Meta platforms.